Hey there, traders. Todd here. Welcome to the Wednesday webinar. Hope you guys are doing well. Happy earnings season. And futures a little bit lower here this morning after kind of a crazy Netflix report. We're early going here in earnings, about 8% of the way through. And so far, earnings have been pretty good. A lot of interesting dynamics going on here, as we've been talking about in the Wednesday live stream that we do here with you. This brief once a week little segment talking a lot about the impact on interest rates and the rotation that's happening between value and growth as the broader markets are very much in consolidation, trying to figure out which way is up. Markets are super tight. We are mostly unchanged in the S&P since May of 22. Here we are halfway through April, two more weeks to go, and we're still in a big old range. So trading is frustrating right now. Markets are confused, and they'll throw cherry on top. Look at the NASDAQ. We'll look at charts here in a second. NASDAQ is in a range for all of April as well. So we have obviously large growth, techie earnings coming up next week. Financials underway. So far, it's been pretty good. Let's bring in the trading analysis team. Alex, flip your camera on.
Oh, sure. Just a sec.
Terry, how you doing, man? Good morning.
Good morning, Todd.
Alex, you just can't peel them away from the charts, right?
Yeah, I'm just looking a couple of things.
What do you think? Opening thoughts, boys.
Yeah, the site, it's the sideways market is fine with me because I think we've had such a good push. We had a 9.5% rally in March in the NDX. And so, for the last couple of weeks, maybe the last 2.5 weeks, it's really been just a sideways consolidation, allowing that index time to play catch up to its moving averages. And both the S&P and the NDX are well above their all three of the key moving averages that we trace. So let the market settle out a little bit, calm down, and then we'll see where we go from here.
Right on. Sounds good. Well, we got a good show for you here. We're obviously going to start at the top. We're going to look at those indexes. Again, wish you guys well. Get my notes. And again, you don't need multiple monitors to trade or invest. You need multiple monitors to run a trading and investing business and media presentation. I can assure you that. All right, so let's jump in here. We'll take a look at those indexes, lay out a few scenarios, and I think the most important thing that we all have to say to ourselves is the market is very, very sideways. Okay, so if we just strip out the Elliott Wave stuff for a second here, even go out to the weekly, let's just take a big step back, which I love to do, and I've done over the entirety of my career. Is when you're really wrapped up in the day-to-day news and technical information being thrown at you in the market, it's sometimes you lose sight of the forest for the trees, and it's important to step back and realize that what are the two things that have happened. One, we've broken downtrend resistance off the late 21 in the NASDAQ. It's the early 22 high in the S&P. And since then, we haven't had any acceleration higher or lower once we've broken out of the downtrend channel. As I said, we're still at the same price we were back here in May of 22. The S&P chart is our lower confidence chart. We are still below the February 2nd high, which is very, very important. If we can get above the February 2nd high, which is 41.95, that would suggest that we may have a 5-wave move off the lows, and 5-wave moves unfold in the direction of the trend, which would suggest it's up. Okay, so we are still below 41.95 on the weekly. Down to the daily, give you a little bit more detail. I have us moving in 5 of actually it'd be 3, 4, 5 within the higher degree wave 5. Okay, I haven't secured this 3, 4 yet because, as I said, the month of April has been very, very quiet and really not getting much guidance here. Is this all of 4 or perhaps 4s here? And again, will we make a move above those February 2nd highs, completing the 5-wave move? Now, We are tracking the alternate. We are tracking a potential triangle, which again, the triangle successfully staying below 41.95 would suggest that the triangle is in play and we have lower prices to go. And I'm very aware of that problem. Now, again, once you start getting into a year-long range, there's multiple possibilities here. There are multiple possibilities. There's a few wave counts we're watching that might suggest October's a low and it's an ABC flat, and we could be in a wave 3 rally. It's just you got to open your mind to multiple possibilities, and when you're trading and investing in here, I think that's very important. So we are watching several counts, and that's going to be, if you're in consolidation, like it's no shortcoming of Elliott Wave. It's just the fact that we are sideways. So that's the S&P. Let's take a quick look at the NASDAQ, and I think you're going to get a little bit more clarity here on the NASDAQ because it's been more directional. And in early part of 23, we've seen a preference for the growth trade. And what that's done is allow the NASDAQ to trace 5 waves from the low. And the February 2nd high is key. We've broken above the February 2nd high. There's wave 4. We've moved up, kind of held that NDX level is 12,880 in the NDX 100 cash. We broke above. And then in April, all we've done is just kind of gone sideways and looking for the next sort of inspiration on the upside. So that's the 1 day. I'll give you a half day here. Again, a lot of chop in there. So we're at the 1272 extension of this February to March decline, trying to get some inspiration. And if we get that, there are upside fib projections in NDX. Okay. So obviously we're in earnings season here. We had, my friend Tom Lee in his research this morning, which he's one of my go-to guys. He writes that 82% of the companies have beat so far. 82% of the companies that have reported so far have beat on a margin of 7.6%. So we're expecting some pretty bad earnings here. And so far, about 80% of companies are beating. Now, they've upped the estimates for how much the S&P 500 companies are going to make in Q1. We're up around $50.25 on expectation. So what does that mean, for EPS? Okay, so let me start out longer term here in a 10-year. What we're looking at here is expected earnings. This is from going back to 2014. So in blue is going to be your S&P 500. In orange is the reported EPS. So the 500 stocks reporting their collective earnings each quarter. You can see in purple, this is going to be forward estimate. So we're up around $48 expected in Q1 of 23. We're now up to 50. And you can see where the market is pricing earnings going into the end of 23 and into 24, $60 per share. Now, the whole year, everyone's going back and forth. Where are earnings for the year going to be for the S&P? $200, $210, $220, $230. If you do 50 times 4, that's 200, right? So that's going to be in the lower end of expectations. But if the estimates are going to be accurate, and we've got some visibility as to where rates are going to go based on the short end from the Fed and longer term based, 10-year plus determined by the market, we might be up at 220, 230 for 2023. Okay. And next one I want to show you here is this is a little bit more zoomed in 3-year chart of EPS. And again, you can clearly see estimate, reported, and the S&P in blue clearly are correlated. So, if we continue to see earnings increases, that's going to give us some clarity as to where we're going in the market. So just looking at Netflix here, let's do a quick chart. And Netflix, crazy round trip move there in Netflix from all the way down to 280 after hours. And where are we? About 324 here. EPS, they slight beat on earnings. They missed on revenues. Free cash flow was up to $2.1 billion, and they gave a big guidance for $3.5 billion in free cash flow going forward. They're kind of righting their ship. They delayed this password sharing thing. I don't know about you guys, but I was always sharing my passwords with friends and family and Netflix, and I knew that was a lot of revenue that was kind of on the sidelines that I needed to bend over and pick up, but they didn't release that program this quarter. They're looking to do that, I guess, hopefully soon. Added 1.75 million subs, a little lower than what they thought, but remember last year at some point they lost 200,000, so started growing again. So Netflix is obviously a communication stock. We're in a position that it's a potential wave 2. This is a stock we're long. We have entries clearly labeled for you there in blue. We've got our stops just below. So if we had a pretty good move down there, sub 300 after earnings, we see no reason that we cannot go on the upside in wave 3. Another stock you're going to be looking for tonight is Tesla. This one's been kind of a bear. Tesla has obviously gotten smoked here in 2022. Nice move up here in 23. And then as the market's kind of gone into consolidation here, we're wondering what exactly this kind of crazy triangle that has been April. Concerned that it may be a B wave triangle. And if that's the case, we don't have a lot of room to move down and C. And traditionally, guys, post triangle thrust, the C wave will do a 618 relationship of A compared to C. That's going to put you right on top of the 786 retracement of the proposed 5-wave move up. So if Tesla is lower tonight, tomorrow on the open, you really, really want to see price above about $172, okay? Because that's going to be the sort of the support of last resort for this bullish count. If we just start moving up, post earnings 195, 200, I have no problem calling this wave 2, and this is just a sloppy start to wave 3 and moving on up. So that's going to be the plan for Tesla tonight. Then I want to kind of shift over to macro, right? The whole thing right now is going to be yields. And let's just do a quick yields analysis. TNX is really driving this market, which is going to be your 10-year yield. Oops, let me drop that in there. Where are we in the yield is very much determining which kind of stock values or growth are going to be leading the way. We're seasonally in a period where value is very strong. We're seasonally in a period where U.S. Treasuries are very weak, which means yields are very strong, which favors value. And we'll talk about that in just a quick sec. We've bounced off the lower end support about 3.3% in the 10-year yield, struggling with about 3.6 to 3.7. If the 10-year yield moves above here, what does that tell the market? What kind of message does that give the market? Is it one of fear, higher rates, inflation, or is it one of confidence, selling bonds because people want to buy stocks? We have to see, and what kind of impact does that have on the macro narrative? And this is one chart that I've really been focusing on with our members, guiding our preference for either value or growth and how we build our portfolios. So this is a multiple part little chart here. In orange is going to be your 10-year yields. In white is going to be value to growth ratio, the iShares IVE, IVW ratio. And just to start, you can clearly see that as U.S. yields are moving up, like what's happening? The white chart, which is value growth, is tracking very, very closely. And obviously, as yields are going up, value stocks like health and health staples, utilities, some would say real estate was a value, but that's kind of gotten a little crazy. Energy is sort of a wild card in the middle, but your traditional value has been outperforming, growth underperforming. Then what happened here specifically, yields moved up, failed against that 4.08% in the 10-year. We had that level perfectly at trade analysis. We captured that perfectly. But what was interesting is growth actually rallied compared to value. Value sold off to growth on this move up in rates. So we're watching just this right here. Value growth is kind of hanging around the lows as yields are. And over to the RRG, the rotation, this is going to be week over week. We're at a very critical point here. This is the weekly. Growth is trying to move into the top right, which is leading, and value is trying to move into the bottom left, which is lagging. So again, what happens with yields at this 3.3 to 3.6%, right down here in orange? What sector of the market, which it's not even sector, which I don't even have a word for it, value or growth, which one gets put in focus here if yields start moving up? Do we complete this move up into growth? And what's interesting over the last 3-4 years, guys, even on this weekly, once you get a shift, growth to leading, value to lagging, it only changes once or twice a year. So if it changes, probabilities are it's going to stay. So everything we're focusing on is what happens here. We have 2 scenarios for you. Scenario 1, yields move up, market favors value, and there's sectors that we're prepped with for our member webinar today with long opportunities. I'm going to flip it over to Terry to give you some more color on this. And scenario 2, kind of like we saw in this period in early 22, will growth outperform even if interest rates move up? And if that's the case, we have to be prepared for sectors and industries and stocks that we want to be long. So it's a very critical point. I want to turn it over to the boys, get follow-up and kind of take you in here. I know I'm posing more questions than answers, but that's the kind of market we're in with this big time consolidation, and you got to have your plan ready now. What say you guys?
Yeah, I think, again, anytime you've got a sideways market, that you're always going to be in this questioning mode as to which way are we headed next. And so, some of the tools that we have using relative rotation, as you just demonstrated, and looking at those, I don't know what you call them, either segments, growth and value. I mean, it's either this or it's
Right.
that, or it's some hybrid, right? So,
Yeah.
but it's where has the momentum been shifting, right? You're tracking over a period of time. You're tracking that change in investor and institutional investor mostly. Not, what's moving the market is really the institutional investors, and we as the retail investors are just trying to follow along and see where they're taking us. So
I don't know. I think you're not giving the at-home guys enough credit, but I don't know. We'll see.
I don't believe we have enough. I don't believe we have enough
firepower.
Make
you do,
moves,
Terry.
right? Yeah.
I might not. You do.
No.
All right.
No.
Jump in there. Get us some clarity in terms of the value growth debate. And viewers, we're streamed to Facebook, YouTube, LinkedIn, and Twitter. Let us know. What do you think? Do you think value and growth? Which one? Is it the value stocks that go in the forefront as the market stays risk averse in the face of higher yields, or somehow we're going to have growth? There's going to be a preference. Even if the market sells off, there's going to be either growth or value is relatively stronger to one another, right? So does the market go up? And if so, which one leads? And if the market goes down, which one shows the most relative strength? So Terry, I'll turn it to you.
All right, swing it over here. Hello, guys. Terry with tradinganalysis.com. Let's get our charts up and running here. We're going to start with the sector leader scoreboard. And if you've been following along, we've been following the outperformance of technology and communications as our 2 top growth sectors. We've seen recently, though, some momentum fade coming in the communications and the tech sector. So while they are outperforming in terms of relative strength, they've been shedding back. And again, that sideways movement that we've seen in the NASDAQ over the month of April, after a big rally in March that brought it here into the leading quadrant, it's really just been kind of a calming period there. That said, to me, we still have a high potential for stocks inside tech and communication due to their high relative strength to continue to make more moves. Now, the other flip side of that coin is looking at these value rotations. I'll animate this thing back and forth here a little bit and show you what's been happening through April, right? And if you also notice, we pointed out the fact that we were seeing a re-engagement of momentum back into staples, healthcare, and maybe utilities, and a little hesitation in industrials of actually trending to the west there. So where we sit today, we just now have the staples sector re-emerging into the improving quadrant. Healthcare is still seen with rising momentum, and so is utilities. And the industrials is just barely edged over here into the lagging quadrant. But again, of all the value sectors, it held a higher relative strength as the rest of them faded. Now, that rotation in growth and value, we certainly are seeing some of the value recapturing upside momentum while the growth is reducing. So I want to take you over and let's take a look inside the staples sector. And this is the plot of the XLP, right? And the XLP is made up of about 34, 35 stocks. And I have them all plotted here inside their own weekly RRG. Now we are still relative to the S&P here. And what I think you should be able to see is I do that same little animation where we saw the entire XLP make that hook north at the end of March. You can see it's kind of a herd mentality, right? Here you have a collective coherent move of majority of stocks within the staples group pushing to the north. Many of these have turned blue. That rising blue improving trend vector also means price appreciation is doing quite well. And several of these that we pointed out in the past have already accelerated themselves back up here into the leading quadrant. Now, we were going to talk about a couple of stocks here. What did we pick, Todd? What were we going to look at here? In the staples sector, I will tell you that that Lamb Weston.
Lamb Weston, yeah.
I'm jumping ahead of on myself. Lamb Weston has been sitting out here in the weakening quadrant, so it did see some momentum fade, but look what's formed. It's formed a hook reversal here from a very high relative strength point. It wants to re-engage upside momentum while it's also holding that high relative strength. I thought we had another stock here that we wanted to highlight, but I mean, just literally any of them, I think you could take a look at. You want to look at Procter & Gamble. Procter & Gamble is actually probably closest to the S&P, right? I mean, the closer you are to the center of the axis here, the more like the S&P you're going to perform.
There's a few in there, Terry. Yeah, let's get out. If that's a boring one, if that's close to the S&P, there's two right there.
Well, that's the point. That's the point. I want to show you the boring one, and then I want to show you the exciting ones. Right?
Yeah.
Okay. So you got a real quick glimpse of one that was working close to the S&P and not doing much, just kind of going sideways. And now here's Hershey's making a new all-time high. Okay. I generated a list the other day, just yesterday, I believe it was. And I found this list of 9 stocks to bring to your attention. You know, we're sitting here with this S&P languishing, moving sideways, while did you notice we've got many stocks actually pushing to new all-time highs, right? Okay, these are all within 1% of their all-time high. Matter of fact, I think when I captured this, they actually all were achieving that. So Lamb Weston is in the staples. Quanta Services, this is utilities, I think. Omnicom is communications, so that is a growth stock. Stryker is healthcare. The CBOE is, of course, financials. O'Reilly is discretionary. AutoZone, these two both are in discretionary. So is McDonald's. And Arthur J. Gallagher is a financial. So there are opportunities out there. Let's jump over, if it's okay with you, let's jump over and take a look at what's going on in healthcare, right? And, you know, the same kind of thing, I've seen a rotation back up in healthcare. Now, healthcare did push to a lower relative strength than staples before it made that vertical move. And you can see that that vertical move has been something almost of an impulsive move back to the upside here in the overall XLV. Again, here's a list of about 30 or so stocks that make up the majority of the component of the XLV. And we do have quite a few rising blue improving trend vectors there. Now, again, one of the more exciting ones is Stryker. Now, I will say that Intuitive Surgical and Stryker are in a similar business. Intuitive Surgical had its earnings report come out last night after the market close, and they beat on their earnings. So I would expect that Stryker is probably going to be right behind. And look at this. So again, I pulled this Stryker from just setting a new all-time high, but it's not just that it's setting a new all-time high. Look how long it's been in an uptrend, and look how clean this uptrend is running, right? You can hardly put a wave count on something like that, right? That's just a nice
Oh,
smooth run.
Alex can do it.
I bet Alex could probably do something with this. But the fact is, do you ever want to buy a stock that's sitting at an all-time high? Not maybe if it's got an overthrow and then you go into a correction, but we set new all-time highs and we just continue making them. That's how you make money here in the market. You do have to follow the trend. Here's Intuitive Surgical. You can see Intuitive Surgical with this rising blue trend vector. Now, obviously, this formed before the earnings report came out, so we'll see how Intuitive Surgical. I haven't even looked at the price action on this one yet. This morning, since the earnings came out, but and then these are my notes that I've made here. So let's get off of that. My computer is there. We go. So, Intuitive Surgical it set a higher high. It had another retraction, and then now it's on another tear again right here, right? So we came back below the 50-day moving average, touched the 200. That's this solid red line here. That's the 200-day moving average. We've got a new bullish MACD that formed back here in late March, and I think Intuitive Surgical potentially is on another track that could take it up through this parallel uptrend. So I'm going to leave it there, Todd, and hand it back to you. We can see what Alex has got, unless you want me to share something else.
Before you hop over, let's just drive the point home that I think we're making in today's show. Go to the sector RRGs again. The whole thing is like, look, XLC, XLK are on the far right hand side. They are outperforming the benchmark, which is the S&P. XLY, which is up around the same, I guess it would be latitude, up is far north.
Momentum level.
But they're all losing momentum, but they're not losing relative strength to the market. As the market's gone sideways, they're losing momentum and maintaining their leadership position. And it all circles back to the question, I think, as to where yields are going. And then you have guys that are heading from the bottom left, but starting to move up: utilities, XLV healthcare, staples, materials and energy, materials, XLI, XLB, just kind of hanging. They're sort of in limbo, but the value guys are trying to rotate in, and there's just so much indecision right now. There's going to be a huge move, and we want to be prepared in either scenario. So we have a few value stocks that we are prepared to move on with our members in the portfolio on the value side, and on the growth side, we want to be prepared as well, because we can't really foretell the future. Terry, you can flip your camera on right now. I'll bring you full screen. We can't foretell the future any better than anyone else can, but we certainly can. You want to assess the now. You want to have plan A ready and plan B ready, and when the catalyst is there, you quickly move to plan A or your plan B. You don't want to be figuring it out as the market's going haywire. So, Alex, throw some charts at us. Let us know. Get us some more actionable levels on these, and start off with some defensive names, and then we'll finish it up with some offensive growth names, and then we'll put a wrap on this. Oh, sorry, your audio's off. Sorry. You are live, right? Sorry, Alex, I always do that too. Alex call. Uh-oh, hold on. Stay there, man. You disappeared. Terry call. Sorry, man. Hang in. And okay, you are live. Go ahead. Sorry.
Am I there now?
You're there. Yep.
Yeah, I had to renew so I'm going to share my screen again.
Yep, you're good.
Okay,
You're live.
So what we are looking here is, we mentioned already Stryker. So on the defensive side, we look for the XLP, XLV, and XLE. So I'm going to start just showing Striker, which already Terry just mentioned. So the wave count shows a continuation on the upside. So this is what we prepared for our today's members with a complete setup of possible entries and exits on this chart. So as you can see clearly, we are still in the uptrend, expecting a small pullback and then a continuation on the upside. So since we have a swing desk, I think a little bit more downside will create perfect opportunity for a nice trade on the upside. So that's Striker. We already prepared. We prepared a lot of them, but Dexcom also looks good. So it seems that it's already moving for our possible wave 2 on the upside. So we have a nice triangle wave count. I'm going to stretch it out just on a 195-minute chart. So we are looking for a triangle break and the first 5 waves on the upside. There is a couple of opportunities in these swing waves for us to trade on the upside. So very nice looking chart. And it seems that we're going to break a triangle and continue further on the upside. So all of that work we are actually pairing up with our work on the sectors. So I'm going to show you the XLE. And we have this triangle on the XLE.
Before you do that, show us XLV, because we started out talking about healthcare.
Sure.
Show us healthcare.
Sure.
Yeah.
Yeah, so healthcare kind of pairs up with our fifth wave move on the upside and the stocks that we selected and find, which are going to mimic this move on the upside. After this is probably a small ABC pullback in this zone that we have here. So we do see this as a wave 3 with a 200% Fibonacci projections for our target for the wave 3 subdivisions are nice. So a nice smaller pullback, which will offer opportunity for a nice move upside in the fifth wave with the targets around, let's say, 137 to 140 on the upside in the XLV, which will actually mimic, the couple of stocks will mimic the same move. So that's why we will actually locate them and actually made the possible entries and exits in line with this wave count on the sectors. So let me just move in energy, because we are observing this triangle. It has been a long time, I think, couple of months. We are actually following this triangle in the XLE, and of course we have a couple of stocks that we also set up on a way for a possible nice trades on the upside. So post triangle trusts, couple of stocks in the XLE have just a little bit of a different wave count. It's not a triangle, it's an ABC, but really nicely concurring with the possible 5 waves up and the pullback in a wave 2, which will be an E wave in a triangle and continuation higher. So we also prepared that for our members, and nice levels for entry, the trade, and stop loss and exits. So that's how we actually run. So we actually do a process of RRG and then select and look sectors on the defensive and offensive, and then we actually search for stocks which are in line with this sector analysis and the wave counts on sectors to actually construct trading opportunities. So
nice.
Yeah.
Throw up. Okay, so yeah, keep going. Sorry.
Yeah, so the next one we looked to was the XLP. I'm just going to show you the wave count on the. So it's basically the same picture. So we identified a possible 5 waves up. We are in a small 4th wave consolidation, which again, following the same path, will offer the opportunity for the possible move higher in stocks. And that's why we prepare the defensive one. So as we do analysis on the sectors and we look growth and value and wave counts on NASDAQ and the S&P, actually we derive a most probable outcome near term, so we can actually populate our swing desk with our clients. So basically, that's the whole process in 1 minute, but it takes hours and days actually to fulfill it. So, yeah.
All right. Anything else you want to throw in front of us? What about throw one staple we're watching? Huge triangle. Throw Costco up there. COST.
Okay, let's look Costco.
Now, I will just interject while he's pulling Costco up is the fact that, I showed most of the stocks in the staples sector with rising momentum. Costco's been the opposite. It's been actually
for sure
seen declining. And look at the sideways action here. It's just it's not going anywhere yet.
It's not. And I think something we found out, which I'm surprised. I haven't checked BJ's in a day or two, but BJ's is actually gaining ground on Costco, which I find pretty amazing. But let's flip off of that.
BJ's
so we did
much higher relative strength.
Yeah. So we have some ideas what we're doing in the value trade, right? So we have some healthcare, we have some staples. On the growth side, do you want me to take it, or is there anything you want to throw in there, Alex? If this is B scenario,
I can show you. We'll look to one stock, which is Hershey on the staples, if you like. So it's basically mimicking as well what we are doing on our defensive side. So basically, pullback in a wave 4, we are looking for a pullback in a small wave 2 with a defined entry and stop loss and continuation higher. So which will be the 5th wave in staples. So it's pretty much kind of a nice pairing up with the stocks, which has a bullish outlook, nice wave counts, and a very kind of a small stop loss entry and kind of a nice reward for a week or two trade. So so that's just a kind of a, what do you say when you begin to eat? It's hors d'oeuvre, I think, in French, or
the appetizer.
Kind of a big, appetizers. Yeah. So we have more stocks for our members after on the members webinar.
Perfect. Throw your camera on. I'm going to finish up with a growth stock here, kind of round out the our scenario 1, scenario 2, and this is XLY. Terry showed that on the rotation on the weekly that it was hesitating. It hasn't moved into the leading quadrant like tech and communications currently reside, but they're moving lower, which means they're losing momentum, which is in line with the market. Alex and I were going through doing our meeting yesterday, and here's XLY on the 1/2 day chart. It's a mess. It is a freaking mess. We from the end of 22, we have 5 waves up. You could really argue have 5 down and then another chop 3 wave move up here, but here we are at the old highs. So what's the path forward? We need to start moving higher through 50, 52, 55 to start to secure this blue count in XLY. Else, we still have a pretty significant ongoing triangle. But fear not. I'm going to put the boys on the spot here. What is my favorite consumer discretionary stock?
Crocs.
There you go, baby. I've got good news.
Crocs has been on a tear, dude.
One, they're cool, and my trading analysis members have been making fun of me for 6 months that Crocs are not cool. I've got good news. I was in Florida, as you guys know, last week, and I brought my Crocs on the boat.
Nice work.
Okay, we went deep sea fishing. I had my Crocs, and the 22-year-old fishing guy, 6'2", blonde, tanned, ripped dude, living the life in South Florida. Talking to him, he's a surfer and a fishing guide, and he's talking about Crocs. I was like, everyone makes fun of me. I'm a dad. I'm 45 years old. I got kids. I don't care anymore. He's like, dude, they're cool now in Florida. Like, the kids are wearing them. I said, really? So they're cool, which is great news. I'll show you the chart. We've talked to you guys about Crocs on this show, but what was cool, we took the kids fishing. And the guys are making fun of me because I'm like struggling, and they say, oh, come on, grandmothers have pulled up the fish that we pull up here. And it winds up being the videos on my Instagram channel. It winds up being a 8.5-foot bull shark, which was awesome. Look at this thing. It was so cool. Whoa! So there's two takeaways from this. You know, one, Crocs are cool, and two, as we're sitting on the boat, which, by the way, on the way out to catching that, my sons, Jake and Brody, caught a barracuda. We also saw a 15-foot great white. So it's like we're on this boat, and all these things that could chop our heads off were floating around us. I couldn't help but think about the analogies with sharks and bears and kind of the way the market is. There's a lot of fins kind of circling this market in here. And as long as you stay on top of the boat, just keep moving, we might be safe and be able to navigate through, or they jump up and grab us. So I just want to end up with a boat. Or a bigger boat. There you go. Going back to the Jaws analogy. So anyways, Crocs earnings coming out on the 27th. This is a stock that we hold in our stock swing. We have a $250,000 portfolio that we manage live for our members. We allocate risk appropriately. This is the position I'm holding in Crocs for that portfolio. Little 50 shares, you know, whatever. We're doing 2, 3, 4, 5% allocation in this, but up nice $1,217. And if you look at where we are on the wave count in Crocs, you know, we are moving up into a potential 1.618 wave 3 objective. And then on up, we should be able to reach higher degree. We're hoping we can get up into the 150s to 160s into our ultimate take profit. So Crocs is a company that's been navigating that supply chain issue really, really well, and just a fun example of a consumer discretionary stock. So that's it, boys. Good show. Closing thoughts. Thanks for joining us, everyone, on YouTube. 2 YouTube channels, Facebook, LinkedIn, and Twitter. So if we didn't answer your questions, it's because, again, I'm trying to monitor all those questions over there and all the different platforms. But check us out at Trading Analysis. Guys, closing comments, thoughts?
See you next week.
Yeah, look forward to more earnings. It's earnings season is kicking off, high gear. And like you said, Tesla coming out tonight, right?
Tesla tonight. Yep. Yeah, there's